So, Prithvi, what would you think should be the strategy on, the secured loans portfolio? I mean, just logically thinking, one would reach a conclusion that, shifting to or increasing your ratio of the secured portfolio might be a better bet under these circumstances, assuming that they are safer in terms of their nature. Would that be wise?
No, Radhika, I think you touched on the most important point there, which is assuming they are safer, uh, right? And I'll come to that in a minute.
Yeah, because you always
It,
think, I mean, you can sell the asset and get your money back, right? That's the assumption.
that is the assumption. I'll come to that in a minute. But before I come to that, uh, the way in which the market is moving is very clear. Secured is continuing to grow, whether secured is loan against property or home loans or uh, even gold loans. That's another form of secured lending. Or automotive is again a unique category in secured. All of those are secured, and all of that is continuing to grow. And InCred as well is very keen to grow that book. Uh, LAP is our fastest growing business. We recently acquired a gold loan portfolio, and we certainly have very high aspirations in secured, right? That will continue. That said, I think it's a fallacy to believe that secured is lower risk. It's not.
Really? Okay.
Look, what is secured? It's essentially transforming one kind of risk into another kind of risk. The risk it is not taking or taking less of is the ability and willingness of the end customer to repay the loan.
Yeah, now that you said it that way, yeah.
Yeah. The risk it is taking more of is on the asset price and the asset quality and the asset liquidity,
Correct.
right? I'll go back to the GFS in the US, in the UK, and the West generally
Yeah.
in 2007, 2008, when you had that cascading wave of mortgage defaults.
Hmm.
Uh, you could see that secured didn't actually protect the banking system the way many people assumed it would. Because if you took that much property and put it on the repo market or the resale market, there is no market.
Right.
At those volumes, the market will tank.
Right.
I think closer to India, I think we've seen what happened in the Dubai airport during the last downturn,
Oh my God. Yeah.
where tens of thousands of luxury cars were abandoned at the airport. And could the financiers behind those cars pick them up and sell them at the price they assumed they would get? No, they couldn't. Again, at those volumes, at that time, there isn't a market. Now, what are the risks you're taking with secured? You're taking risks on the asset,
Right. Right.
right? And yes, we are doing gold loans and we'll do it the right way. But part of the reason why gold loans are booming right now is gold prices are up.
Yeah. True.
They won't stay up forever, right? Uh, we know that asset prices have cycles. And really, I mean, the quality of a secured business, you will find out on the down cycle, right?
That. Yep.
And I think it's empirically not the case if you just look at financial history that secured is safe, right? A great example of an unsecured business which is lower risk
Mm-hmm.
than pretty much any secured business in the country is InCred student loan portfolio.
Wow.
It's unsecured,
Right.
but we underwrite the quality of the student. And given the very stringent underwriting we have on the quality of the student, it's way safer than secured businesses where we're taking assets. So, yes, secured has a lot going for it. We as a company will pivot to secured. We as an economy will pivot to more secured. But let's do that carefully. It is not the case that secured is safe.
I think that was 101 of understanding what risk really is, right? Because, I mean, one would assume that secured assets are secured in nature. I think the words can also play games at times. But that was wonderfully explained. Yes, how can we forget the, the subprime crisis as well? So fantastically explained, Prithvi. Thanks. Um, One other area we would love to know about when we come back to, India and how the credit space is evolving. How is it looking in terms of the new to credit customers? Are they also coming from tier one, tier two cities? Has the growth slowed down there, or is that continuing to go? Because that would be a really good positive sign if the new to credit customers are, still growing at a substantial pace.
Uh, Again, great question, Radhika. It's something I'm very passionate about. I mean, I remember I actually used to work for Capital One, as you mentioned, and I knew them as a credit card provider before I knew them as an employer.
Okay.
Because when I was a grad student, they gave me a $200 credit card, which was a lifeline for me in the US at that time. Right? So, new to credit, there's a lot of great work to be done there. I think it's slightly a bit of an optical illusion to think new to credit has declined.
Okay.
As a percentage of the industry's new dispersals, it's clearly come down. But that's because, as an industry, we've just added so much weight to the bureaus in the last 10 years, right? If the bureaus are now covering over 600 million people, I think it's well over 600 million now.
Yeah.
There are only so many new people coming into the bureaus, but essentially we've taken up the slack, which was there 10 years ago. There are still going to be new people coming through, right? Young people. Uh,
So the denominator keeps
yeah,
going up, right? Okay.
yeah. So, and that remains a fantastic opportunity. And that's a business we do. It's, in fact, one of our best businesses. I really believe the key to that business and the key to, maintaining credit access, which is something we've done so well at as a country in the last 10 years. Uh, the key to that will be better underwriting. And I'll come back to things like Account Aggregator, right? Uh, which I believe is actually the best framework anywhere in the world for consented data sharing, right? We are today using it in our part of the economy for getting bank statements.
Hmm.
Nandan's vision was that this can apply to all data,
Wow.
right? Employment verification, telecom data, right? Utility data,
Hmm.
family structure data, asset ownership data, whether it's physical or financial assets, all of that can be facilitated by Sahamati, which is the organization, and Account Aggregator, which is the rails which makes that data sharing possible, right? All of this will help us underwrite new to credit customers. What does new to credit mean? It just means the guy is not on the bureau. Now, the bureau is one of dozens of different data sources we can use to figure out if this person should or should not get a loan, right? And I think the key to keeping that pathway to the formal economy open to young people, to people who are moving up the economic ladder, which is vital for us as a country, right, both economically and politically, is to invest in frameworks like Segmati and AA, make them bigger and broader. So, safe underwriting from a risk viewpoint to this critical part of the economy continues, right? I don't think it's dropped off a cliff. I know that in our business it's not.
Right.
And I think there is an optical illusion in the CIBIL data because of the moving denominator. But I do think there is a call to action there in terms of taking AA, taking Sahmati further beyond the, kind of limited use case that we have today.
Today.
to a much broader suite of data that should, unlock a whole lot of more growth in the economy.
Fantastic. I love how you said it's one of the best in the world, is what you're saying today.
I actually, as far as I know, it is the best in the world, right?
Yeah.
When I talk to my colleagues in the UK and Europe, and they're really excited about open banking.
Correct. That's what
They're doing open banking.
Yeah, when I remember the first time I read about open banking, I was like, oh my God, this is such a, transformational thing. And I wondered, but I think like you put it now, I think this we have it in our own home now, right?
Yeah. We do open banking. I don't want us to get complacent. I think there's a lot of, self congratulation in our world, right? Whether it's for UPI or Account Aggregator or
Yeah,
PMJDY, they're all great. But self congratulation
make
can,
us complacent. Yeah.
can make us complacent. That's not who we want to be.
Right.
We're still a poor country. There's a lot of work we need to do for the country, right? And so these are rails. This is infrastructure that we need to put in place. Uh, it actually includes secure to the earlier point, right?
Mm.
Asset ownership, kinship,
Right.
right?
So important. Yeah.
How do you establish kinship in India? It's actually quite complex, right?
Correct.
And to what extent can you use the AA rails, use the AA framework to do that in a transparent and customer centric way rather than through some kind of, I will send an investigator to your mohalla to see who you really are kind of thing, right?
Correct. 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 Yeah. That's very insightful actually what you just said. Can you just for our viewers, right? We find a lot of these concepts and words very confounding, if I can say. Underwriting. Could you explain simplistically what underwriting means? Is there a simple
No, it's
definition?
very, very simple. It's very, very simple.
Yeah.
Figuring out if this applicant will pay us back.
Okay.
That's what underwriting is.
Okay.
It's both an art and a science. Ideally, it's actually both. It's not one or the other. But really, underwriting means figuring out if this is a risk we're going to take. The same word is used in insurance, which actually,
Yeah. Correct.
uh, you know, uh, sometimes predates, credit in terms of the discipline. But really, the word underwriting comes from I will underwrite this loan, right? As in right under, right?
Okay.
I will write this ticket and, give you the money and take the IOU, right? But really, what leads to me giving the money and taking the IOU as a banker?
It's
Really, my assessment of risk.
fair enough. When we were on the subject of new to credit, I was also wondering, like, is there a certain pattern you see in terms of the demographics? Like, are younger people, um, do younger people carry higher risk in terms of paying back their loans, or you can't really draw these conclusions based on age or demogs?
Empirically, uh, what you said is true, but that flattens out past 24 or 25.
Okay.
So people below 25 are higher risk than people over 25. But actually, our biggest consumer pool is in the age group of 25 to 35,
Hmm.
which is natural.
Natural.
Young people need more credit than, people in their 50s. Uh, and I think that's more a reflection of life stability, right?
Hmm.
Have the young people settled into a job? Do they understand the product? Do they understand the implications of not honoring the uh, credit arrangement, which many of them don't.
Yeah.
Uh, and this is true around the world, right? When I was with Capital One in the US, we had a separate vertical called young adults.
Hmm.
It had the same product, the same credit policy, but it was a separate vertical because the style and the communication was totally different. Right?
Right.
Because in the US, I mean, people in that, 18 to 22 age group simply didn't understand the product. Oh, I'm meant to repay this, and
Right.
where does the money come from?
Well,
What happens if I don't?
right.
Right? Are these guys out to trick me? All of these questions that almost nobody in their 30s or 40s have.
Right.
Uh, they
So you
don't
have
know.
to package it very
They don't know.
differently.
And,
Yeah.
and, and I actually think there is a, again, to the point about public infrastructure, I think there's a DPI as in Digital Public Infrastructure Initiative that I'll add to my list there, which is credit education,
Yep.
right? I really think I mean, like today using UPI is second nature to so many Indians, or operating their bank account is second nature to so many Indians.
Yeah.
There's no reason why credit should be any more complicated than that.
Right.
Uh, but I mean, I would love to see a credit equivalent of mutual fund sahi hai. Right?
Correct. Absolutely.
I
Absolutely.
mean, it's not for a one player out of thousands like us
Yeah.
to take that effort, which I think is part of the problem, right? Because mutual fund sahi hai has been done by the industry association,
Correct. Yeah.
right? So
Yeah, in fact, it's funny you said that because I even because when I mean I've been on the wealth side of things previously as well, and I remember meeting very very rich families as well, where the DNA is that हम कभी कर्जा नहीं लेते. Like in our whole family, we'll never borrow money, right? So there are, I think, many families, and there's this ingrained cultural DNA where people think loans are bad, right? Or it's kind of a toxic word, and I think that definitely needs to be changed with credit education. And I know NBFCs and all there are a lot of bodies, I think, with the government bodies which are working towards this.
I hope so. I
Yeah.
hope so. I mean, by the way, I mean, I'm recalling a conversation with one of our very senior people in tech at InCred. Uh, Super smart guy, top 10 IIT ranker, uh, who very proudly told me I've never given or taken a loan.
Yeah.
And so I got into probing his financial habits and said, you keep money as savings deposit, right? He said, yes, of course, right? And I put money in FDs as well, right? Because I get a better interest rate. That's a loan. You're not the borrower, you're the lender, but you are lending the money to the
Bank.
bank.
Yeah. Poor guy, you just burst his bubble.
So, I mean, I think there's, this, I think Polonia speaking to Laertes, neither a borrower nor a lender be. Actually, in practice, all of us are both borrowers and lenders.
You've given us a lot of these fantastic lines already in this episode. We're going to use all of them in the teaser now. Um, I think yeah, on those lines, do you see lenders offering more and more credit products to the same individual? I think that's one other area where I think we would love to know that our uh, is that ideal also? I mean, I think even if
No, it's not ideal. And I can, speak to that because I know it's a, genuine, both a regulatory concern and an industry concern. And I can speak a little bit to why it's happening and what the answer is. It will touch on themes we've already explored. I'll go back to the, concept of STPL and bureau surrogate,
mm-hmm,
right? We are essentially giving someone a loan without checking what their income is,
okay,
right? Now, once you've given that person a loan, they're your customer. And like all good businesses, you want to monetize your customer base and you want to give them more of your products, which could be another loan. So, nothing wrong with that. The problem is you haven't checked what the income is,
mm,
right? So, the key to solving the problem is actually better income verification, right? There's absolutely nothing wrong with the same customer getting multiple loans from the same lender or from different lenders as long as they can afford it. And whether they can afford it or not has a lot to do with what do they earn. How are they going to repay the loan? And I do think there's a genuine problem with, you know, customers who don't understand credit taking a 5,000 rupee loan, then getting upgraded to a 10,000 rupee loan and then using that money to repay the 5,000 rupee loan.
Oh my God.
And it can go into a loop.
Hmm.
And this problem is not unique to India, it's happened elsewhere. That is genuinely a problem. I mean, I've been at CRO events where the CRO of Bajaj, he stood up and, called all of us to action as industry leaders, saying, guys, we've got to stop,
Right.
right? Uh, Fakri, great guy, right? Really like him, and I agree with him. And ideally, we will find a way to stop without inviting, you know, for the regulator or the court system to make us stop, because it is in our enlightened self-interest. We don't want customers to get over leveraged, right?
Absolutely.
So, but I think the mechanics of why nobody ever did, but the mechanics of why it happened go back to the STPL bureau surrogate constructs, which has kind of played itself out,
Hmm.
served its purpose in the broader kind of narrative of the industry. Uh, and we now need to find a way to address that underlying customer need more responsibly with better income verification and tighter control on over leverage.
That's great. That's great. Um, a last question for you, Prithvi. I think more importantly, what is on your wish list for fintech and the consumer lending space?
A lot of things. I'm pausing because that's a lot of stuff. Some of them we've already talked about.
Yeah.
Most of what I think we need, infrastructure at the national level or at the India stack level to underwrite better and therefore keep up the, fantastic access to credit that we've created in the last 10 years, keep that going over the next 10 years uh, in a very responsible way. And we can't play the next 10 years the way we played the last 10 years, so we will need a new set of tools. That could be account aggregator for income verification. It could be, account aggregator for financial asset ownership. I don't want to sound like account aggregator is the answer, but consented data sharing across the ecosystem so that we can continue to underwrite what is still a credit hungry country responsibly uh, and keep the wheels of the economy moving. That would be a whole bunch of stuff which is on my wish list. I can drill down to two or three more specific things. A digital way of verifying property ownership, a digital way of verifying financial asset ownership, uh, digital ways of verifying kinship, uh, right?
Mm.
Which is who's married to whom, whose brother will, support him. Uh, Digital ways of verifying even employment or skills or education, all of which are, very kludgy today.
You're right.
Um,
But can I say something? If all of this will be digitally verifiable, then where will the competitive advantage lie in risk analytics?
be smarter.
Yeah.
No, but actually, I think that's a serious question.
Yeah. And like
Uh,
AI, if you want to bring it in terms of, what is that going to kind of improve things if digitally everything is available?
Hopefully, it will. Hopefully, it will. And hopefully, look, AI is a catchphrase which describes hundreds of different technologies. But at the level of will AI help us achieve all of this? My belief is it will. Uh, to the point about how do we
Yeah.
create alpha?
Right.
How do we
Right.
how do we compete?
What's the edge?
Right?
Yeah.
Two, three thoughts there. First is that digital is just better,
Mm.
right? It's not that all these verifications are being well done in an analog world today. They're just not happening today,
Okay.
right? For example, where we've successfully digitized the credit bureau and bank statement sharing, the levels of frauds have come way, way, way down, right? Uh, Digital KYC is a lot more secure
Hmm.
than the old, OSV based KYC that we used to have as recently as 5 years ago, right? So the reason for digitization is less about even the advanced analytics
Okay.
and more about the fraud control and the security. And with it, right, the lower cost and therefore the wider access and the broader distribution to tier 2, tier 3 India, and the lower risk of collusion at the branch level and
Fair.
all that
Fair.
good stuff, right?
Yeah.
So that's the reason for digital, because it's better, number one, and cheaper, number two, rather than because it's like digital and digital is generally good, okay? And better in terms of fraud control.
Right.
Uh, in terms of where is the alpha, right? Uh, there isn't an alpha on just the fact of digitization at the India level,
Okay.
uh, which is to say that we've got to keep reinventing ourselves
Hmm.
uh, every month to stay ahead of the curve, right? Uh, I wish this for the economy as a whole. I wish this for the industry as a whole. And I do believe it'll play to our strengths given our competencies. But there'll be other companies which have similar competencies which also benefit from that shift towards digital. Uh, and the third is I don't think digital is like a silver bullet. Digitization to kar liye ho gaya.
Hmm.
I mean,
It just made it in head is like, oh, it just makes everything easier. So, what more to it? But I think your point is there's still a lot of that predictive um, analytics that comes into play,
yeah,
right? Which cannot be replaced by just
exactly.
data, consumer data.
So, and uh, I mean, we will essentially need to keep evolving our strategy, our user experience, our product portfolio every month, every year as that new landscape emerges, right? A good example of where this has happened in the last 5 years, after InCred was well on the road, but where these were still, technologies getting embedded, was Aadhaar based video KYC and Account Aggregator. Both have worked for us.
Right.
They played to our strengths, right? So that's a terrain where we back ourselves to compete. Right.
Fair enough. I think that's been a fantastic episode with you, Prithvi. I'm hoping you'll come back soon and we'll have another round of deep dive into what exactly goes into risk analytics as well. But thank you so much for joining us on this episode.
My pleasure. Thanks, Radhika. Thanks for taking all of that in. I hope I hope it was clear, and I hope you enjoyed the conversation.
Absolutely. Thank you so much.